It's Thursday, December 7th. And yesterday's market, choppy. I mean, we're just getting this chop. Do I know where the market's going? No. Do I see it kind of converging onto and consolidating? Bollinger Bands or cinching up. TrendSpider's guidance says it's going up. I think we're going up for long term. I continue to see this gap here in the Qs down to 378, 376. So I'm just being careful. I'm not buying. I'm not selling. I'm trimming. I'm using this end of the year to actually clean things up. But we'll go over some things that you can do. Some stocks that are trading pretty well. Broadcom earnings are coming out after the bell, so we can talk about that one as well. But let's start off with Thursday. Since it's Thursday, jobless claims, they edge up. And what this means is the unemployment numbers, the people who actually claim unemployment, initial jobless claims edged up 1,000, 220,000. This confirms that the job market is going as expected. And so, we should have some sense of soft landing, some sense of rates probably being reduced. It further showing the weakness in the job market, which should bode well for no further rate hikes. It's kind of the overall market bodes well. I mean, your guess is as good as mine. Inflation is still above the 2% goal, but hey, if somebody tells you, well, we're absolutely going to soar, you don't know that. You don't know that. One thing that I do want to point out to you guys is that, here in my algorithm that's in TrendSpider, and you get it when you sign up for TrendSpider, you start there at 353. This is a nice 9% gain, and you're not out of this one. Yes, it doesn't have confirmation. No, I would not get into the Qs right now. It's just a little too risky on the short term. Long term, absolutely get in. But what I really want to point out is this down here in TrendSpider. This performance chart, when you see it on the screen, it says performance chart 16.1% versus minus 3% for the asset performance. And you look over here, date analyzed, 24 months, so 2 years, okay? You had 25 positions. You win 40% of the time. You lose 60% of the time. The average win is 6%. So over 20, this is my 4-hour algorithm that you can see. It basically trades the Qs. It trades anything that has a chart. You can trade Bitcoin. You can do whatever you want. It performs differently depending on the chart. But specifically with the Qs, it gains you 16% versus losing 3% if you bought 2 years ago. Simple as that. Again, if you want TrendSpider, you go over here to my Linktree. The link is down below, Linktree, linktr.ee/daily stock pick. You click on this top button here. And we had Black Friday sales. You had the opportunity to get it a little bit lower. I would not wait. It's $429 for the yearly prepay. The fact that we are heading into probably another bull market bodes well. Again, TrendSpider saying, hey, we're going to go up. If we're going to go up, that $429, depending on how much you trade or how much you invest, is absolutely nothing. You'll gain it. The longer you wait for a sale, the more you miss out on the entries and exits. But here in the Qs, you were in at 353. We've gone on this bull run. I'm a little bit concerned about that gap down below. But if you're looking for the long term, there's no better time to buy than right now. So I did want to point out in TrendSpider that one's up there, that we still have sales going on TrendSpider. You can sign up. Just use that link in the link tree. So again, one thing that I want to point out too, if you're trading, this got me yesterday. If you're trading without a strategy, stop. Take a 30-day challenge. You are, December 7th right now? Go till January 7th. Take one qualified trade for the next 30 days. Okay? Quantify. Basically, you say, okay, if the MACD is crossing up, I'm going to buy. When the MACD crosses down, I'm going to sell. Choose your time frame. Is it 5 minutes? Is it 10 minutes? Do it on moving averages. Do whatever you want to do. Do it on fundamentals. Do it on anything that you decide is good enough for you to trade on. Follow your rule by 100%. Journal everything. Journal. Use Savvy Trader. And to talk about Savvy Trader, there is a change. The trading portfolio, if you want to subscribe to it, it's $25 a month. I had nothing to do with this. Savvy Trader has costs to it. So they basically enacted, hey, you can have one free portfolio. And I chose the core portfolio, which is 35 stocks that I think you can invest in and not be worried about. But I'll show you Savvy Trader in a bit. We'll talk about journal trading. Analyze your data. Just look at it. Look back at it. Learn from the mistakes in the execution. Build discipline. Build confidence. Gain experience. Develop your edge. That's the way you do this. And here's Savvy Trader. Savvy Trader is free for you to sign up for. You can do your own journal trading. You can compare yourself. We'll look at the core portfolio. And we can look at the last 1 month. And we can compare it against the Qs. We're not beating the Qs. The daily stock pick core portfolio is up 4%. The NASDAQ is up 4.2%. We are beating SPY. SPY, on the other hand, is up 4.3%. Oh, daily stock pick core portfolio is only up 4.02%. So we're not beating SPY anymore over 1 month. Over 3 months, we are beating SPY. SPY is up 2.41%, and the daily stock pick core portfolio is up 3.2%. So, but I want you to journal your trades, put your portfolio into Savvy Trader, track yourself. If you are not beating the S&P, if you are not beating something else, then put the majority of your money into some type of ETF that is diversified. That's the way you do it. It's simple. It's easy. Just do that. One thing that I want to point out, one of the Savvy Traders that I found was Shay Buller. And he's just a great trader. He listed yesterday. Now that my growth portfolio holdings have reported their earnings, here's the order from most to least impressive for Q3. This is a solid list of growth names. Melly, CELH, DOCN, Snowflake, MongoDB, CrowdStrike, Datadog, Palantir, Net, Tesla, Team, the Trading Desk, Paycom, GLBE, CF. All of these are solid names. So if you're not following Shay on Twitter, you absolutely should. The way you can get this link is to sign up for my newsletter. It's the fourth link right down here, dailystockpick.substack.com. My newsletter is free every day. You get the notes from the podcast. You get all the links. So what you're going to do is you just go over here. And if you want anybody to follow on Instagram, on Twitter, and you scroll down and you see like Brad Gerstner, just click on that link. It will bring you to this tweet and you can simply follow them. Don't ask me who I follow. Don't ask me who I follow on Instagram. You'll see it. If I think it's important, I'm going to link it here. Like these guys, down here, they asked me, Bullish Bites. I like these guys. Follow them on Instagram. You click on that. And if you're on your phone, it's even better. But if you just click on that and then you can follow them. I mean, nice and simple. I put it in a nice, easy fashion for you to do in the newsletter. So make sure you subscribe to the newsletter. Here on the link tree is where you're going to get to it. Another one that I follow is TrendSpider, and you can see here there's a lot of insider selling at Coinbase, and TrendSpider has all that information. I actually like to go to FinViz to see some of the insider stuff. It's just laid out a little bit better, and I like TrendSpider. TrendSpider has all the information that you need. It has way more information that I use. But specifically FinViz, they lay it out in a good thing. You can see December 4th. I mean, these are $12 million. These are not insignificant amounts. Look at that. Ever since November 22nd, I mean, even back here, you were talking a couple $1,000,000 with directors and stuff. In August, selling at 77. These guys are selling at 103. These guys are selling at 130. This dude just sold at 140. He sold $3 million worth at 140. So there's a lot of insider selling here that's going on Coinbase. Doesn't mean, hey, let's get out. It means, hey, we're at a 52-week high. 147 is the 52-week high. That's your 8.95% down. If we go over here and we look at Coinbase in TrendSpider, and we look at my algorithm loses you 53% on this. You lose 53% buying and holding, so it's about the same. We're currently in that run. Like I said, I posted this on the newsletter. The other day, the 4-hour algo has you in and coined with a 93% gain. Ever since then, it's broken down. You've covered the gap back down to about 133. In pre-market, it's trading at 132. Do I think you should get in? I mean, when that Bitcoin ETF comes out, everybody's going to be holding their stuff in Coinbase. So I think that the selling is justified because it's at a 52-week high. I just don't think it's crazy to think, hey, I'm going to pay for this one. Palantir. Kathy Woods yesterday, we can look at this link on Twitter. Kathy Woods yesterday bought a shit ton of Palantir. 1.58 million shares. Okay, that's 1.58 million shares. Let's just do that. What's 1.58 million times 17?
It's 26,860,000.
You talk about insider buys, insider sells. That's an insider buy. And Palantir's up 1.63%. Palantir is part of the core portfolio. Here in Savvy Trader, if you want to see my core portfolio, you just click on that and you can see it's part of the, now it was part of the trading portfolio, but remember, I sold at 20. I called this, I said at 20, I want to sell. It was up here. It got to 22 the next day. I sold on this green candle at 20. It got to 22. I lost out on $2 per share. Big deal. I can buy back here at $17.14. It is probably going to cause a MACD in the next couple of days. I think 17 is your support. I think if we go down further, it would cover down to 15. I think you start your position, and I think you start to buy here. I think you start adding to your position if we start going down. But with her buying that much and that quickly, I think that's a big sign that big money is getting into there. XLY, you guys know I buy XLY because if we just look at, before we look at that, let's look at XLY here. Because if we go to holdings, you can see Amazon and Tesla are almost that's 40%. Yeah, 40% of the actual ETF is just Amazon and Tesla. But this article that I'm going to put in the newsletter is a solid article with the top 10 best performing consumer discretionary stocks in XLY. And Tesla and Amazon are not in there. It's Carnival, it's Burlington, it's PDD, it's Royal Caribbean, Florin Decker Holdings, Alta, which I own outright, Williams, Expedia, Dick's, New Oriental Education and Technology. Those are the top ones in this ETF that are, there's a reason I'm in this ETF. It's to own Tesla, it's to own Amazon, but I also get the rest of these. So understand that diversifying yourself through ETFs is probably a good way to get some exposure to different areas that have opportunity to go up. Now, how do I find these discretionaries? You can use on TrendSpider, if you subscribe, I provide you a list of spider sectors, and you can look at the charts on these. And if we look at XLY, you can see it's got a nice upward trend. Am I buying right here? No, I would have bought below the 200-day. XLG, which is just the top 50 stocks in the S&P 500. It's not the total S&P 500, it's the top 50. This has done really, really well for you. Now, over the past 2 years, you can look down at this performance. XLG, you've made 12% over 24 months. If you just bought XLG 24 months ago, you would have lost 0.4%. So the algorithm works on some things, doesn't work on others, but specifically in these, you want to get into these when they're down low. So the other place you can look when it's down low is here on Seeking Alpha. What you're going to do is you're going to go to this second link. You get $50 off Seeking Alpha Premium. I believe that this is free, but use that link to get to Seeking Alpha, sign up for an account, and you'll see these ranges right here. You can see the day range, but you also have the 52-week range. So if we look at XLY, which is consumer discretionary, which is right here, 1 month, 6.5%, you can see it's up near its 52-week high. Do you want to buy it? Probably not. You want to wait for it to cool off a little bit. Utilities has just been a beaten down sector. The reason it's beaten down is because bond rates were so high. And if we look at the 10-year, the bond rates have come down. Well, now utilities become a little bit more. I think it was Bill Gross that said, hey, start buying utilities in the beaten down sectors. Well, energy is even more beaten down. But energy is, a good predictor of when we're going into a recession. Right now, it's kind of indicating that we're going into a recession, but it's more about the demand side. Demand from China is down and our supply is up. So we've been pumping it out like nobody's business. But you look over 3 years, you've made 101%. It's the best performing sector over 3 years. So you want to use this information in Seeking Alpha to make your determination. It's a solid way to look at it. A stock in the core portfolio that I posted about, SPG. And I posted, we'll look at this note real quick. I posted this. SPG is in the Daily Stock Pick core portfolio on 1031, my podcast. I said it's a solid stock. Told you earnings were going to be solid because I knew the consumer was strong. And with a 5.75% dividend, you'd be buying here. Just over 1 month later, you're up 24%, 3 days away from hitting the ex-dividend date. Today is the ex-dividend date. Today, you are down 1.51%, and that's because the dividend was just taken out. Do I expect it to continue to go up? I don't think so. I mean, SPG is one of those where you buy it at 100 and it goes to 120. The PE is 19. The forward PE is 20. Again, the dividend is 5.65. The target price is 130. I wouldn't be buying at 131 or 129. I honestly just wait for it to cool off. But it's a good indication of how you use the core portfolio to find stocks that are beaten down and you can make money on. So that's a great one. SMCI, great opportunity for me right here. I think that this line right here, which is at 300, I was just drawing this on YouTube Live, 300 right here. You can see you got a nice little pattern where it's just basically getting off at 300. You're at 253 right now, 256. Now, here's what I want to tell you. The algorithm has not gotten you in. That 9-day is still moving down. The 50-day is still moving positive. So I believe that we will have a MACD cross up some point in time. Wait until you have a confirmation. If you want to start adding now, doesn't mean that you won't come down here to 235. Just understand that you can add on the way down, anticipating this up. This is not something. When I talk about SMCI, the PE is 23. The forward PE is 12. They have plenty of cash on hand. There's no problem. The target price is $375. Look at the most recent ones. Initiated buy in October with a $413 price target. You'll see. I'll show you on the chart. There is a gap up to 350. You can see the insiders are selling at, cost at 55. This guy's selling at 267. That was a options exercise. They're selling in the high 260s, high 270s in rather large amounts. That's just because it's up so much. When you look at how much it's up year to date, this is up 208% year to date. Solid run. Still, the fundamentals are there. The forward PE is only 12. As they continue to grow, that PE comes in and the valuation actually becomes cheaper. So that's where I like this one. And I wanted to point that one out. Another one in the core portfolio that we know is Google. And I said, hey, buy Google under 130. Yesterday, it dipped down to 130. Down here, it dipped down to 129, 128. Its low was 129.40, 129.59. Even this day, December 5th in the morning, was at 129.73. 130 is the price to buy this one at. It's at 136 right now. Is it has it run too much? I don't know. I mean, here's the news. Google Gemini launches represents significant innovation in Gen AI, general AI. This was a huge release from them yesterday. The other article I will include is Google shows off new Gemini AI model, new AI chip, and hypercomputer. They are making strides like no other big name AI one is. Gemini is actually beating ChatGPT. Google has the scale to do this. Now, remember, ChatGPT has Microsoft as a partner, but it's just a partner. All of Google has their eyes on AI. The other one that just hasn't come out with AI, but I think it has a solid, fundamental AI kind of built in. Think about this. And I posted this, I believe, on Twitter yesterday. Apple, here in this country, Apple has 60% here in the US. 60% of the people in the US that have a smartphone have an Apple phone. That is a device that will run AI, that will, gain search. They could basically crush Google on search if they develop a good AI. Now, the danger in this is we all know Siri is absolutely horrible, but the jump from before to now, like before their most recent iOS 11, I think what it is, it was bad. It was bad, but now it's much better. So you're getting up there. So I do think that you have trading opportunities in these. Now, one that's not in the core portfolio, but I've said about it before, and I believe it was Chris on YouTube that pointed out, Rivian. Rivian's on a run. And if you look at this, Rivian has a 1651 buy right here. And you can see it's put in solid, just consolidation down there at 16. Bollinger Bands are expanding. You're up above the 9-day. I think this is a $30 stock. I think you get to cover this gap maybe on this run. Right now it's trading at 19. It's up 3.54%. That 50-day is moving positive. So I think as we move positive, this one continues to run. The problem that you have with Rivian is the valuation. If we go over here to FinViz, they're not making money. I think the last one that they were losing $30,000 on every truck that they sell. Year to date, it's flat. It's 0.27. So it has not participated in the run of everything this year. They did issue more bond. They did issue more debt. The target price is 26. The most recent initiation today, up to 23. Buy from Stifel. I think it's a $30 stock. I think it runs to that. You can see Barron's buy Rivian stock, not Lucid. AMD takes on NVIDIA, Chewy share slide, Yahoo Finance. You can read all about it, but I do think Rivian has the momentum right now to continue to run. The RSI is at 60, so be careful. It's a little bit overbought. You want to add a little bit at a time. You don't want to go all in on a name like this because you could be down 10% tomorrow. Social requests. Let's see. There was somebody yesterday, SDOW, from Spotify. He says, sorry, but why are you selling and not giving a free trial out? If it's good, like you said, should you pay for it right? I mean, I don't understand the whole question, but they say, the only dumb question is the question not answered. Well, the only other dumb question is the question not researched. If you go over here to TrendSpider, this is the stuff that I sell. TrendSpider, you can get a free 7-day trial. There's no problem. It's got a free trial. I believe in it. You're just going to pay more. I mean, if you want the trial, you'll pay $780. If you watch me, you can see the results of I can bring on a number of people who have bought TrendSpider. Everybody loves it that puts in the work on it. It's not a plug and play thing. You have to do the work on it, but has a free 7-day trial. You can get it. Seeking Alpha, free 7-day trial. No problem. Daily Stock Pick newsletter, free 7-day trial. Those are the things that I'm selling. So I don't understand your question, Soto. Maybe if you have another issue, you can bring it up to me. You can email me directly because I can't respond to you on Spotify. But I would be more than happy to respond to you on email or any of the socials if you want. You can go over here to Linktree. But it shows that you're not going to Linktree and looking because there are free 7-day trials on everything. 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 I mean, flat out, just everything. So, kind of wanted to address that. Mike from Spotify wants me to look at ADI, Analog Devices. I don't know anything about this one, so let's look at ADI. Analog Devices, solid move. From 164 to 180. You're over the 200-day. You got some gaps down here. Their earnings at 201 wasn't great, but they probably provided some decent guidance. You're coming off a little bit here. The algorithm loses you 12% versus buying and holding loses you only 2%. So it's probably a long-term, that's a long-term trend up. Analog devices, probably a pretty good one. Let's go over here to close that down. We'll close that down. We're going to go to ADI on FinViz. We'll look at this first, and then we'll look at Seeking Alpha. ADI, income $3.31 billion. Their PE is a little bit expensive, 27. Forward PE is a little bit lower at 20, which is good, which means if they continue, 2% dividend. Average target price, 202. You're at 180. The 52-week high is 200, so you're just 9% below that. Year to date, you're up 10%. I mean, this just looks like a solid winner. The most recent analyst said TD Cowen, November 27th, they raised it from 200 to 210, so not a huge raise. Morgan Stanley in November also said, hey, we're going to go to 225. So you can probably assume that 200 to 220 is probably your top. You can see right here about 197. 200 is going to be tough for it to get through. The 52-week high is $200 to $200.10. So they're going to need some type of catalyst to break through that 200. If we go through and look at these sales, November 27th at 183. The EVP sold $3 million worth. So I don't see anybody buying it per se, but I do see some exercise options here that haven't been sold. So maybe people are just exercising their options, but not necessarily selling them. The chair and CEO sold $1 million worth at 182. Seems like that 180 price probably is a pretty good entry point. A pretty good resistance point. You do on the weekly here, you do have a MACD cross up. If we just look at it here and I zoom in a little bit, you have a MACD cross up right there. Your RSI is at 52. If we go over here to Seeking Alpha and we look at ADI. I know this company just from a cursory standpoint. If you look at the 5-year, you're making money on this, so it's not something that looks horrible. The quant has it as a hold. I think it's a little bit expensive, and that would be the valuation and the growth a little bit high on that one. But you can't argue with the fact that it's a good, solid company that's making money. You can see the 52-week range right here is 154 to 200. I think. For me, it definitely looks like a stock where your downside is limited and your upside is limited. So from a standpoint of, hey, we're going to trade this one. I don't think that the volatility justifies trading it. But if you're looking to own it, I think it's a solid win. I can't imagine that you would be upset in holding this one. Because again, your downside is limited, but your upside, I just think your upside is probably a little bit stretched. So hopefully that answers your question, Mike. Alexander wants me to look at AMD, and we're going to look at AMD chart. I personally own AMD. I think my average purchase price is around, 80 something. Might be 90 something. Because I have dollar cost averaged into this. I bought at 109, in fact. It's at 117. The algorithm got you out with a nice 20% gain. AMD yesterday, I posted a couple of things yesterday. This particular one, AMD is fighting with NVIDIA. After AMD launches next-gen open-source software, ROC M6, which really delivers for AI developers, it has 8 times the performance compared to AMD's previous generation. NVIDIA puts out a hit piece on Forbes stating that their software is faster. NVIDIA is just coming after AMD and saying, hey, we're better. There's also a Seeking Alpha article on this one where AMD sinks as it takes wraps off NVIDIA competitor, updates AI forecast. They upped their AI forecast. AMD is doing very well. They are the second best chip. NVIDIA is the top chip. So you probably just have to make sure that, which one do I really want? If you want to just trade in semis, SOXX is the semiconductor ETF. And you can see here on the algorithm, just got out with a 13% gain there. If you want a levered ETF on that one, SOXL is the long, SOXS is the short. SOXL just got you out with a 43% gain in the algorithm. 43% gain in the algorithm. That is over what? Let's just say this was a purchase on November 1st, and it got you out with a 43% gain. I mean, you made all the way up to 60% on this one. This is a triple levered ETF. So it's not like it's going to, you're not going to be super, super safe in this one. So understand that. But read those articles. I own NVIDIA and AMD outright. I do not own SOXX. But I think SOXX, if you're not sure which chip maker to actually get, I think that's a solid one to get. Just get SOXX. And if you want, by the way, if you just go to Seeking Alpha, and this is free as well. I think it's free. I don't know if it's actually free. But SOXX, if you go over here and you just look at peers, and it'll pull up PSI, XSD, FTXL. It'll pull up the other semiconductor ETFs, and you can take a look at them. Look at the expense, 0.38. XSD is 0.36. SMH is 0.36. SOXQ is that is 0.19. So, if you're into expense, and you can look at all these. If you look, SMH is the top performer over 1 year. So you can look at those. They'll trade differently. The actual assets under management, AUM, is what you really want to look at. The larger ones typically are what I would invest in when it comes to ETFs. So Noah wants me to look at PHG. What is PHG? Let's look at PHG. This is Conlike Phillips. Let's see if we have a chart. I'll look at the chart. PHG. New York Registry share. Yeah, it's a foreign company. I mean, I don't particularly enjoy investing in these. This is like BABA. It's just a foreign company that seems to be here. We can look at let's look at the summary in Seeking Alpha. Operates as a healthcare technology company in North America, the Great China, and internationally it operates through diagnosis and treatments. Yeah, it looks like it's a New York holding of the actual company. From a standpoint of Seeking Alpha, they say buy, Wall Street hold. The stock looks like it's at its 52-week range is 23 to 12, and you're trading right now at 1966. I mean, the market cap doesn't look crazy on this one. Like you might have problem. Let's see how many shares. Shares outstanding, 920 million. That's not a lot. That's not a ton. It's got an $18 billion market cap, but they're not making money. So in this market, I'd probably stay out of that one. Target was a podcast favorite. I am still holding Target. I took it out of the core portfolio, but you can see we've gone on a run here. You had the gap on earnings. Looks solid. This might be a turnaround story that you can invest in. The problem is, and I say this on the podcast all the time, good stocks with good profits, with good products, with good management. That last part, good management. They suck. They just suck. They've just shown that they suck. Go into a Target and look at their inventories. It's getting better. But solidly over the past 6 to 12 months, they've just run out of everything. And all you see are people running around. You can never find a cash register into Target. The self-checkout lines are packed. They're just people who are focused on e-commerce. So they're turning things around. It's a 100% a turnaround story. Here's Target. The PE is 16. The forward PE is 14. The average target price is $150. This was a $300 stock, mind you, a $300 stock. And all they did was fall. Year to date, it's down 10%. The most recent earnings, TSLA Advisory Group outperformed to 160. They upgraded it to. In November, TD Cowen brought it down to 148. In November, Wells Fargo, equal weight, but they didn't put a price target on it. So understand that I think it could be a turnaround story. When you look at this weekly, you can see the 50-day starting to move positive. You're starting to see that turnaround. I've held it this entire time. Up here, this was $270. So I don't have a lot of love for Target, but I do think it could be a turnaround. SCHD is the other one. This is the Schwab Dividend Equity. It is what it is. I mean, if you want to invest in this one, SCHD, I think it's got they've been hurt on this one. for the year. Year to date, it's down 4.51. You got a dividend of 3.63. I'm not completely in love with this one. I mean, you can take a look at, go over to Seeking Alpha, and you can look at the holdings of this one. I'm not 100% in love with it. Verizon, Amgen, Broadcom, Coca-Cola. I mean, these stocks have just been beaten down. So is it coming back? Probably. The 52-week range, you're between 66 and 78, and you're trading at 72. Doesn't excite me. Intel is one that I think this one has run its course as like all the others. You got out with a 19% gain. I would wait for this one to get under 40. I think it'll get under 40. I think it'll come back down here to 35. Do I think it covers this gap at 33? I don't think so. I think you're going to use the 200-day as support. You could even use the 50-day as support at 40. But I do think you come down here to 36, 37. Intel has just had a crazy, crazy run. If we look at a long term of Intel, you can see the 200-day may provide some resistance here, but with it, the 50-day moving positive, I think it will continue. That 200-day absolutely provided resistance. Trading on the upside of the Bollinger Bands, cross up on the MACD, RSI is high at 69. That's why I said stay out of this one at 46 on the weekly. But I think you do have an opportunity when it pulls back. I just think it's a little bit extended. So let's talk about some of the scans. Uber is one that got a scan. This one traded to 59.99 yesterday. I'd like to sell this over 60. Am I buying it here at 60? No. I think you can get this under 60 right here at 59.88. I just think this one pulls back. Look at that RSI. It's continuing to run, even though the stock's going higher. It's an overbought stock. And the RSI and the MACD just crossed up again, but it just seems to be crossing up and crossing down. So 60 is where I'm looking at selling this one. I will buy back. I will take my profits, and I will bag back probably around in the 50s. I have no doubt in my mind I will buy this one back. Square. God, I wish I would have bought this one instead of PayPal. This one has just had a monster run here. 43, and you're at a 50% gain. Yeah, 50% gain right here. Just in 1 month. 50% gain in 1 month. That is a solid gain. This is part crypto. This is part just the company's running better. This is part just everything. I think you get to this gap at 73. I think it's a solid stock. I think this one, if you're in this one, stay in it. If you're not in this one, I think if you want to play it from 68 to 73, I think you've got confirmation. I think you're fine. Lithium Americas. This one, I want to point out this one because it's one of the energy names that's in our energy trading names in TrendSpider, but you don't have confirmation. And I would not get into this one, even though you have this gap up here at 12 to 15. I would probably just stay out of this one. It does come up as a bullish one, so I figured I'd bring it up, but I would stay out of this one. SMDD. This is the ultra pro short of the mid cap. So as the mid caps go down, this goes up. You can see as we've gone up, this one's gone down. I wouldn't buy this one either. You don't have confirmation. That 9 days just starting to turn, not worth the risk. There are a lot of other good stocks like Rivian, like XLY, like some of the other ones. DRV. DRV is the bear, 3 times bear. On the real estate, I would not get into this one either. You just don't have the confirmation. Yes, it's bullish, but I would not get into that one. Short Dow, SDOW. This is the Ultra Pro 3 times levered Dow short. I would not get into this one. We're in a choppy market. There's no reason to risk your money right now when you're down below that 9-day. Rivian looks solid. I like that one. Google is going to go up. Now, one that I think is an interesting one is Southern Company. This is a utility. We talked about the utilities being beaten down. You can see here, this got you out with a 3% gain. This got you out with a 1% gain. But if you bought here and just held, that's a nice 16% gain over just a couple of months. October was not bad for utilities. The bond rates came down. So utilities, we went over here and we looked at the market data and we looked at XLU, which is down here. There it is. And the 52-week range, 54 to 73. And right now you're trading at what? Let's see. XLU is trading at 63. So it's trading at 63. And if we go over here to XLU, you'll see we're seeing, and I think I said it earlier, Bill Gross is the one who said, hey, buy utilities. Southern Company's just going with XLU. So if we look at XLU and we look at the holdings, you can see Nextera is 1, Southern Company's number 2. So it's a solid utility company that gets you a dividend, and it's got a decent chart. You know, you just Southern Company, it's just passed above its 200-day. But if we look at a long term, it's got an opportunity to come back. I mean, you can see back here in August 2022, this was a $79 stock. All the while getting a, let's see, SO. I think it's a 3% dividend, 2.79. So solid gain. Okay, there you go. There's the podcast. If you've got any questions on here, I hope that Soto writes to me. I hope you ask where you can get 7-day trials and where I'm not giving free trials. I mean, that yes, I'm selling this stuff, but you get 7-day trials. If you don't like it, you get your money back after 7 days. Seeking Alpha has a 7-day trial. TrendSpider has a 7-day trial. My paid newsletter has a 7-day trial. Webull does not have a 7-day trial. But Webull, I just put money in there. In fact, let's do a check. I think I'm at 3,060 or something. I put $1,000 in there at the beginning of the year, and I am at $3,089, $3,090. So solid gain. But if you want to support the podcast, these are the things. If you made money and I looked at your stock and I saved you money, if I did anything, it's the time of year to give. Cash App, PayPal, Venmo. Just say thank you. $1. If you made money, I don't care if you give me $5, $20, $100. I've gotten tips as high as $1,000. But if you've made money and you're giving $1, if I had $1 for every person that listened to this podcast, I'd be a rich man. I would be a rich man. So show your love. But yeah, I will talk to you guys tomorrow. Have a great day.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.